Hey folks, it's Simon here with your Tao Daily video for Monday the 17th of June 2024. Happy Monday to you. Hope you had a great weekend. Happy Father's Day. So the big two indices, the S&P 500 and the Nasdaq, continue to look really strong. The S&P was basically flat on Friday. The Nasdaq was up about 0.5%. And the Nasdaq here has cleared these Fibonacci targets I pointed out last week. Really kind of no end in sight, although it continues to look very extended. The S&P, I can make a good case for why this could be due for a pullback. Not only is it extended, but it's struggling to get through these Fibonacci targets that I pointed out last week. But even if markets do have a pullback here, I think it's unlikely to be the final top. Big reason for that is sentiment, right? You look at this is just a free indicator, right? You get what you pay for, but it's extremely unusual to see sentiment in the fear section with the stock market at all-time highs. Now, various times over the last decade plus, this bull market has been called the most hated bull market ever, the most hated rally ever. And part of the reason for that, well, behind that, is this, all right? Anybody who survived or lived through the global financial crisis of 2008, what we've seen in the 15 years since is a lot of QE, a lot of zero interest rate policy, money printing, ridiculous government deficits, etc. And there's just been this nagging little fear at the back of everyone's mind of systemic failure or some sort of global financial reset. And so there's always a chorus of people very happy to say, right, this is it, this is the real one, this is where markets melt down every time we have a pullback. And of course they don't. I mean, they probably will one day, but betting on the end of the world every time there's a pullback has not been a winning strategy. Now, the breadth divergences are real. We've only got 42% of stocks in the S&P 500 trading above their 50-day moving average. So that's not what we want to see when the index is at all-time highs. And that's highlighted by the fact that the equally weighted S&P 500 is also trading below its 50-day moving average. So you would think something's got to give. Either the S&P kind of has a pullback or the rest of the stocks within the S&P suddenly catch up to the three leaders. Now, talking about divergences, we're hosting a special training session this Wednesday on divergences. We'll be talking about regular bullish and bearish divergence. We'll also teach you how to spot hidden divergence, both bullish and bearish, and we'll be unveiling our new divergence blueprint indicator. And we'll show you what the indicator means, what all these tabs with the different numbers mean, how this indicator can be used to improve your edge. It works on any symbol, particularly symbols where there is volume. Obviously, stocks are my main thing, but whether you're trading stocks or ETFs, we'll go through the indicator. We'll go through how powerful it is in helping you detect divergences and both trend continuation and trend reversal setups. So come along on Wednesday. It's a free training session. I promise you'll get lots of value from it. And I'm really excited about it. So click the link below to register, and I look forward to seeing you online. Thank you.